A question that's been popping up on the minds of many. Could a rate cut be coming this month? Federal Reserve Chair Jerome Powell hinted that interest rates could finally come down in September, marking the first time in nearly a year.
Consumer reporter Josh Sidorowicz in your corner with what it could mean for your money. Josh, good morning.
Good morning to both of you. Well, look, investors sure seem pretty confident that this rate cut here is coming. We'll know for sure when the Fed meets here in just a couple of weeks from now. But, you know, whenever we do see rates come down, there are, of course, a few key impacts you would likely see then on your own finances. So let's start with savings. Funny enough, it's one of the places where you actually like to see higher rates. These past few years, high yield savings accounts have offered some great returns, sometimes more 4 or 5%. A rate cut, it would bring those down a bit, but those high yield accounts are still going to continue to return some of the best rates compared to traditional savings accounts, which usually only offer maybe about 0.5%, if that, in interest. Okay, what about credit cards? When it comes to those, your issuer will likely lower your variable rate. The prime rate is tied to the Fed key interest rate. It probably, though, won't happen right away. And even then, just don't bank on saving a ton of money. And here's why. Experts say, considering how historically high credit card rates are right now, well, they caution that 1/4 to 1/2 percentage point cut probably isn't going to make that big of a difference if you're carrying a balance month to month. Now, the big one a lot of people have been asking about is, what about mortgages? But here's the thing, whether you're in the market or you're looking to refinance, it's not clear how much influence a Fed rate cut could actually have. And that's because mortgage rates are not tied directly to Fed moves. Inflation and other economic indicators, those tend to dictate mortgage rates a little bit more, or the 10-year Treasury note. So that remains to be seen. Good news is, though, personal loans and those interest rates are tied to the key rate. So, you know, new loans that are taken out, it does become then cheaper to borrow money in that case.
Credit card loans, car payments,
exactly.
all of that.
Yes.
Okay. All right. Well, we'll see what happens. Thank you, Josh.
Yep.
Right. Thank you, Josh. And to contact him, you can always fill out a consumer complaint form by scanning the QR code on your screen or by going to cbsphiladelphia.com/inyourcorner.